can you like leave a message? Just drop a message in the chat box. Hi, Rita. How are you? Dara, hi, hello. I'm expecting more messages. I know we have quite a number, about 8 of us here. So I'm expecting more messages. Hello, Nami. I hope I got that right. Hello. Right. More, please, more. I need to get responses from everybody. How are you doing? Nice. All right, welcome to this week's thank you. I love the response. Thank you, everybody. All right, so welcome to the first week. To the fourth week. So what did I say first? Welcome to the fourth week of the FinTech training, and this week we'll be talking about FinTech transactions and contract. My name is Omotoye Omosifumi, and I am a lawyer based in Lagos. It's my absolute pleasure to be your host today. And looks like we're going to have an exciting session together. Looks like we're all going to have so much fun today. So I'm looking forward to it. And I would have loved to do some interaction with everybody before we start, but we're pressed for time. So let me put somebody on the spot first. Let me put someone on the spot. Who should I do this to? Dara, hi, Dara. Can you unmute your mic, please, Dara? Hi, Dara. How are you?
All right, I have unmuted. I'm very fine. How are you?
How are you doing?
I'm very fine.
Right. So, how's been the last 3 weeks at JIIPCC FinTech training? Has it been?
I would say education. I would say I've learned a whole lot, things I never knew before. I'm just in first year in the university, and it's really enlightening that I know all these things. I get to be exposed about stuff concerning financial technology and all of it. It's very, very enlightening, and I'm so happy about it.
Thank you so much for that, Dara. And I'm so happy for you, really, because you got to learn about these things even while you're just starting in school. So trust me, I bet that you're going to enjoy it. It's going to open opportunities for you. And I'm looking forward to how you're going to apply these things over time. I've been looking forward. I think your name is Dara Ita, so I'm going to be looking forward to your name. I'm going to be expecting those articles, those details, those things you'll be writing about FinTech. So I'm looking forward to those much. Rita, you're the first to send a message. How are you, Rita? Rita, hi. Okay, I don't think Rita can hear us right now, but no problem. So we'll move on to, okay. We'll move on to, oh, hi, Rita, how are you? I did not really get that, so no problem. Let's continue. So today the topic for this week is FinTech transactions and contracts. So I know for a fact that you all have had time to prepare. You've made presentation. I'm sure both groups are ready, and I can tell you that our mentors are also ready. So it's going to be an exciting session. We're going to learn from some of the best people in FinTech, really. I saw Mr. Kilani's name, and trust me, that's someone you want to pay attention to. That's someone you really want to learn from about FinTech. All right, so let's talk about, you all know what this program is about, JIIPCC, you all know how, what JIIPCC is about, but we're going to touch it a little bit. So JIIPCC is a well, it started as an intellectual property and mentorship program. That the focus was more on intellectual property, but now it has expanded. We have a wider scope than usual. Like there are more activities. There's now energy. There's ICT. There's energy. There is why so the screen is okay. I really can't see anything. One second, please. Okay, so I'm going to let me do that. Yeah, sorry about that. The network kicked me out for a minute. All right. So we'll do introductions about JIIPCC, what it is about. Okay. Now, JIIPCC started as an intellectual property training firm where we managed creatives and taught people about intellectual property. But now it has expanded to involve energy and patent drafting, robotics, and artificial intelligence. So from your learning so far, so can you hear me? Can everyone hear me?
Yes, I can.
All right, thank you, Dara. Thank you very much. So the network has been somehow today. Okay. All right. So okay, I will continue to. I need the slides, please. I need the slides. I can't see anything. Okay. Okay. I think I will do the slides. So the network has been somehow this end. So let me try this. Wow. Okay, I'm so sorry, really giving us network is not permitting much right now. So instead, the mentee's presentation, then we'll move on with that. So let's study. Can we have their presentation, please? Group one.
Good day, everyone. Please, I'm trying to switch on my camera. Sorry for the delay.
Yeah, no problem. No problem, Amanda. I think we're all experiencing network issues. So just go ahead. You can start with the introduction, and then we'll let everything work as they come. Hi, Amanda, can you hear me? Oh, wow.
Can you see me now?
Yeah, I can.
Can you see me
Just
now?
continue.
Okay.
I can see you.
Okay.
Yes.
Good
yes.
afternoon, everyone. Let me try to share my screen. I am Ofebo Amanda, representing Group 1 FinTech on the topic FinTech unicorns. Please, I want to share my screen so you can see. Yes.
Right.
Okay. Can you see my screen? Please, can you hear me?
Yes,
Yes,
we can
yes.
hear you.
We can hear you, Amanda.
Can you see my screen?
Yes, we can see your screen.
Okay. So I'm talking on FinTech unicorns, the journey. And before I proceed, let me just briefly say that the term unicorn describes startups that are venture backed, that are valued at more than 1 billion and are venture backed. But the problem with this definition is who exactly decides what qualifies as a startup. And that's why scholars like Pitchard have described a unicorn as a venture-backed company that raised around a post-money valuation of £1 billion. It's no more, now you should take note that it's no more unicorn if it's stopped being venture-backed. Now our outline, we have our introduction, we have early stages of FinTech unicorns, we have notable FinTech unicorns, we have challenges of FinTech unicorns, we have recommendations, we have future of FinTech unicorns, and we have a conclusion. Now, we should know that unicorn was termed by Aileen Lee. He or she was the founder of a seed-stage venture capital called Cowboy Ventures. Now, according to Aileen, the first unicorns were founded in the 1990s, and that is an example of one of the first unicorns is Google. We all know Google is a browser, it's a company, it has diversified into different things. We have Google Sheets, we know what Google is. Now we have a good example, some of the most popular FinTech unicorns came in the early 2000s, like Robinhood, Sophie, and Klarna. Klarna, I don't know if you're conversant with Klarna. It's used to pay, like it's used as a pay app that you can actually make transactions with. Then, FinTech unicorns are private startups in the FinTech industry that have achieved a valuation of over $1 billion. They are not listed on the stock market, stock exchange. They are not venture. They are venture backed and they are not listed on the stock exchange. They build their fortune from initial public offers, IPOs. They are forefront of the innovation in FinTech industry. They've provided more competition, jobs, and opportunities in the economy. FinTech started as a result of challenges in the traditional financial industry. Some of these challenges are lack of customers, data, lack of payment systems became outdated. Now, they grew and attracted venture capitalists who provided the necessary funds to scale up operations. As a result of the changing needs of the market, FinTech unicorns had to invest in new technologies and to enter partnerships. Now, in 2021, recently, FinTech emerged as one of the top sectors for VC investments. The same year, it was a banner year for venture capital and the unicorn herd. Like, for instance, 591 new unicorns were invented. In terms of investment, 2021 experienced 183% year-over-year growth in funding and a 139 billion total investment. However, in 2022, although the amount of funding dropped by 20%, with the rise of 2021, nevertheless, by the end of 2022, the number of active FinTech unicorns reached to 312, still showing a dramatic increase over the years. And might I add that as of 2023, as of January 2023, new unicorns have emerged. Yeah, 2 new unicorns have been announced as of January 2023. Now, notable fintech unicorns, we have Clover Health, which is valued at $1.2 billion. We have Cabbage, another global fintech unicorn that is valued at 1.35 billion. We have Robinhood, is said to be valued at 1.3 billion. We have Coinbase, valued at 1.6 billion. We have Aptus, another unicorn that is valued at $1.9 billion. There's also Square, there's also Stripe, and so on. Now, it should be noted that the USA has the largest number of fintech unicorns with an average of 51%. Following the USA closely is China with an average of 11%, and the United Kingdom with an average of 10%. Now, fintech unicorn companies in Africa. There are 5 fintech unicorns in Africa and 5 major fintech unicorns in Africa, and 3 of which are OPay, Flutterwave, and Paystack, and they are Nigerian companies. This clearly indicates that the fintech industry in Nigeria is something to be reckoned with. Now, for instance, Nigeria is revered as one of the kings of digital economy because 4 leading fintech unicorns were founded in Nigeria that are running Africa, founded in Nigeria, and they are InterSwitch, Flutterwave, JIIPCC, and OPay. Now, in the recent years, the fintech industries in Nigeria has played host to enormous foreign investments and business consolidations and collaborations. For instance, in 2021, Flutterwave became Africa's 4th unicorn startup after it had announced that it closed on a funding of $170 million in a Series C round, valuing the company now at $1 billion. That is the classic example of what a unicorn represents. Once it hits $1 billion, once the firm is valued at $1 billion, it's a unicorn. It shouldn't exceed $1 billion, shouldn't go beyond. And Flutterwave is an example of a firm that valued the company at $1 billion as at 2021. Am I communicating? Can you guys hear me?
Yes.
Okay.
Yes, we can hear you.
Oh, okay. Some of the challenges now that fintech unicorns face are maintaining relevance in a rapidly evolving market. You know, the market today is quite volatile, starting with COVID, everything becoming online. There's this competition. Everyone is striving to get on top. A fintech company that was a unicorn fintech that was on top today may not be the unicorn fintech that is on top tomorrow. Nothing is actually certain. There is always that volatility in the evolving market. Then like I said earlier, staying ahead of competition. Companies are doing everything to stay ahead of competition. Some are trying to be at the top, some are trying not to be, you know how it's a kind of rat race anyway. Now we have data and payment security. There's always the issue of cybersecurity whenever you're dealing with fintech. The cybersecurity is something that data and payment security issues are something that cannot be done away with. For instance, there's this example that was given that you could stay on your computer from morning till night, protecting your computers, protecting your internet, your transactions from being breached by cybersecurity. But one moment of absence from your system can make you, so it's something that you can be managed, but it cannot be totally eradicated. Now, lack of awareness of end users. Now, for instance, there's a large portion of Africa that doesn't have adequate access to financial products. You say, oh, it's a digital age. Fine, you could be among the blessed, privileged. that have access to internet, that have access. Some people don't even know what a computer is. If you tell them what a computer is, you get a blank stare. Then lack of awareness of end users. Who are the end users? You and I. We may not fully grasp what requires of us to maintain the internet connection and and use FinTech unicorns successfully. We may not know what it entails or what it requires of us to use unicorn FinTech successfully. Now, working alongside legacy systems like banks, ensuring user retention and regulatory compliance. Now, we have recommendations to solve those challenges I mentioned earlier. For instance, working with regulators and make sure that you hire a capable team that is abreast with FinTech policies and laws. Like, for instance, in this FinTech internship, we have some of you mentors who are regulators that work with companies that lead capable teams. For instance, that lead capable teams and they are abreast with FinTech policies and laws. Then there's a need to differentiate its products and services and to ensure defensibility. Now, there's a source for customers on search engine ads, through company websites, social media. That is to tackle the issue of data, the data issue. Now, taking the time to prepare a detailed market segmentation and to build a sales process, reviewing the company's procedures to protect the data of the employees, customers, and business partners, as well as companies, networks, and systems. The future of FinTech unicorns. The future of FinTech unicorns is certain due to the uncertainty of the market, the uncertainty of the digital age at large, but it holds a lot of potential. For instance, 2021, like I said earlier, was the banner year of FinTech. We saw a lot of emergence of new FinTechs. Now, FinTech is an imperfect contraption. As being an imperfect contraption, there are a lot of challenges it faces. Doesn't mean it's not successful. It's like every other institution that faces their own challenges, but the borderline is how it's able to overcome those challenges, how it manages those challenges and still establish themselves as major players in the financial space. No, I would say that I can assert that FinTech unicorns are likely to continue to expand globally, evolve, and to enter into more partnerships. We still look forward to more innovative strides in the FinTech ecosystem when it comes to unicorns. Like I said, as of this year, 2 unicorns have been announced from January of this year. Now, in conclusion, FinTech unicorns will continue to navigate the range of challenges. They will need to adapt and to evolve to stay in competition. Change is constant. Everything is subject to change, but the ability of the FinTech unicorns to harness positive change, to keep them relevant in their industry is what matters. And I'm throwing the floor open to questions. If there are no questions, I would say I had a tremendous experience working collaboratively with Adebemi Sola Adebajo, Anoluapo Abigail Babatunde, Blessing Ohaka, Ibiki Sonia, Ndayeng Ian, Wangu Madebora, Obobapa, Oludipo, Ibukunoluwa, Tamno Nini, Tekena. Thank you so much. And I hope you were able
Thank you very much. Yeah, we did. Thank you very much, Amanda. Thank you for that. Thank you. Thank you. Was
I can go on.
Yes, please. Thank you.
Thank you.
Okay, that was some well-researched work, and thank you for the presentation. You were very articulate with it. Thank you. But we really apologize for the network itch we've been having over and over again. I mean, most of us are familiar with the issue in Nigeria. Still, I'd like to go over, before the second group does their presentation, before group 2 goes ahead with their presentation, I like to go over what JIIPCC is about. I'm sure we're familiar with it, but let's do it. I'm sure if I start to ask everyone what it is about, you can give me some insight. Well, let's do it together now. So let's talk about JIIPCC, then afterwards we'll do the second group presentation. Can I have the slide, please? Okay. All right. Thank you. So about JIIPCC. So JIIPCC mentorship and internship program is a quarterly program for students and professionals across Africa. The mentees are afforded the opportunity to access valuable training, network, mentorship, internship, discussion forums, industry update, and resource materials from experienced mentors. Thank you. The program seeks to encourage continuous training, development, and evolution in Africa and across the world. You can watch our videos by searching for JIIPCC on YouTube and Facebook using the hashtag JIIPCC MIP. That's the hashtag. Now, can we'll continue with that over time. There's something with the presentation. But thank you. So the objective of the program, is to provide easy access to quality professional guidance, training, and resource material for students and young professionals in Africa, to facilitate dialogue and network among experienced and less experienced practitioners and stakeholders. It also seeks to transform mentees into mentors and leaders for the next generation, and of course, to facilitate further mentorship, internship, scholarship, and job placement for the mentees. So trust me, JIIPCC is like a sounding board for us. I'm also a product of JIIPCC. I feel like every time I meet people, I should tell them that, because JIIPCC introduced me to the world of intellectual property, and so far the experience has been wonderful. It is what I am. My career right now is based on most of the things I learned from JIIPCC. So I am assuring you that if you really take your time to learn the things, to commit to the program, you can base your career out of what is happening right here. I know people that we did the program together, and all they do right now is either intellectual property, FinTech, anything they had learned from the program, that is what they're working on. So I am assuring you that paying attention to JIIPCC it is enough to set you off on your career. All right, so for those of us that have enjoyed the mentorship program so far, those of us that have actually enjoyed the mentorship program, there is an opportunity for you to connect with the mentors one-on-one. You pick a mentor, which of the mentor, any one of them, just pick one, and then you learn directly from them, one-on-one, a very personal interaction. Unlike this, where we do it, the crowd learning system, the school system, this one you have the opportunity to sit with them and hear so your questions, your doubts, everything you have about whatever field, the mentors are available. So you just use the link showing on your screen to connect, and you can set up your mentorship with them. Right. I think that is it. Don't forget that the mentorship happens quarterly, so there'll be subsequent ones and in other fields. So if you're doing this right now, if you're doing FinTech right now, there's always an opportunity for you to try artificial intelligence, intellectual property, energy, patents drafting, whatever other, blockchain, NFT, and the metaverse. So they're available for the next quarter. Right now, right now we are registration is closed for this quarter, so the next quarter is open. All right, so we'll move on to the next group presentation. Group 2, I hope you're ready for your presentation. Group 2.
Yes, sir. I'll try and share the screen.
All right, we can hear you, but it's quite scattered here. I'm sure it's the network. So
Okay. Yes, sir. I can't share a screen because of your screen is on.
okay. All right, I think you can try it now. The screen is done. You can try now.
Share screen now.
Yeah, please do. But if there's anyone else in group 2 that can stand in for her while she fixes that, just start on her behalf. Then when she joins us, we'll continue. She can take over from wherever you are. So any other member of group 2, please. Is there anyone in group 2 that can take over already? Our network is quite bad right now.
I'm still
that was not, I did not get that. It was not clear. It was not very clear.
I said I'm unable to share my screen.
Yeah. Don't worry about the presentation. Don't worry about the slide. Just go ahead with your presentation.
Oh, okay. So basically for reaching so
Okay. Hi. Hi, Obi. Hi.
okay, so I'm about to.
Okay. Your network has not been very clear. We could barely hear you.
Oh, okay, so let me.
Okay, sounds better now.
So
I hope it's like this.
oh, okay, sir.
All
Okay,
right.
sir. So I said the main reason why FinTech sector revolves around the provision of financial services is basically for leveraging technology. So I said, in order to seal a smart contract, you must always end it with an agreement. Now, it is risky for businesses to establish verbal agreements without any form of documentation, so that we know this kind of ignorance if one gets a verbal agreement without establishing a documented agreement. So we're going to be looking at different agreements in FinTech sector. So the first one is founders agreement or shareholders agreement. This is a form of legal document that is created by co-founders of a company. It lays out all the ownership rights and responsibilities, resolution, and other aspects that are quite important to be documented between the founders and company. Another one is employment agreement. This is a contract containing terms and conditions of work, which specifies the circumstances in which the employee can anticipate working in. It enables the employer to leave the terms and conditions of an employment. Number 3 is lodging agreement. This is a contract containing terms and conditions of work, which specifies the circumstances in which the employee can anticipate working in. It enables the employer to leave the terms and conditions of an employment. Number 4 is The fintech startup that are directly engaged in providing credit and loan facilities. So this particular agreement focuses on the loan facilities. So Anima, please, can you help me share the screen? Anima,
I think we can't hear her. We can't, and we can't also see her screen. So please, backup presenter, please, you can step in and also share your screen on behalf of your group.
Okay. Just continue. There's no need. We'll go ahead without the slide. Just continue.
Okay, sir. So I said another is vendor agreements. This outlines the terms of relationship between the fintech company and its vendors. Another is data processing agreements, DPA. This is a legal contract between a data controller and a data processor.
Hi, Toby. Go ahead. Can you see your slides? If you can see them, just continue. We don't want to eat into our time. I understand that the network is quite bad, so just continue with your presentation without the slides. As long as you can see them and you can articulate them, we're fine. Is Toby still with us? Okay. I don't think. All right, guys. It looks like the network is bad all around, but we're going to continue. So I am very certain that we have all done our research. And let me put my video. I had to shut the video to preserve the network to see if it could affect anything. But since we're all here, all right, so I'm sure we have all done our research about fintech and contract. So let's have a brief interaction while Toby tries to sort ours, and before we call our mentors to give their verdict. So let me call on somebody. Amanda, nice presentation, by the way. Thank you for that. Thank you. So Dara, I think I will put Dara on the spot again. Dara, so what can you tell us about fintech and contracts?
Hello. Okay. Sorry, come again.
and your contract.
Hello. Hello. Hello.
And I hear me.
I cannot hear you. Hello.
Dara.
Okay, I can hear you now. Hello.
Okay,
All right. Talking about fintech and contracts. So contracts are basically agreements. So what I would understand by that are the agreements that any fintech company should normally have. And this was like the subject of our presentation for group 2. We have founders agreement, which is, this is like a contract between the founders of a company. If they are co-founders, this is like an agreement, is a contract between, please, can you hear me?
Yeah, Mr. Dara, you can actually proceed. We can hear you. We can hear you. Or what I'm suggesting that we can do, since most of our mentees are having issues with the network, we can actually invite our mentees.
All right. So, okay. So,
Hussein, are you there? Dara, please, can you hold on a minute if you don't mind?
hello?
Yes,
Hello?
I'm back. I'm back.
Okay. All right.
Dara, can you hold on a minute? Can you hold on a minute, Dara?
Sure, sure.
Just give us some time. Let's see if we can take the mentors very quickly. Hussein, kindly walk around that so that once we are done with the mentors review on the presentations and everything else, then we can step back into the program so that we don't bore them because of the network issues that we are having at the moment. Hussein, please kindly proceed.
All right, thank you very much, sir. Apologies for network fluctuation here and there between the moderator and myself, the backup moderator. I'll be calling on Mr. George quickly to give us his presentation and also comments on the groups that are presented so far. So, Mr. George Onyeuchi, if you're on the call, please, you can unmute yourself.
Okay, can you hear me? Am I clear?
Yes, we can hear you.
We can hear you.
Hear you.
All right, guys. Good afternoon, and thanks again for having me here. Pretty interesting topics you have for discussion today. I think the first one is around unicorn. Quite an interesting conversation in the fintech space, and the other presentation I think is about agreement, fintech agreement. For the first topic and presentation on fintech unicorns, it was quite a good presentation with quite a lot of, especially the trying to bring out that evolution of what has happened in the last couple of years, and how the industry have produced more unicorns over the last couple of years, and talking about giving a sense of what unicorn is, right? Post-money valuation of $1 billion now. But I'm not sure you assume everybody understood what you mean by post-money valuation. You didn't probably put a little bit more emphasis to try to explain what that whole concept is all about. What is post-money valuation? And I want to believe that probably not exactly 100% of the audience might exactly know what you mean. So I guess that's the part of the presentation that didn't come out at all. Also, I probably would have wanted to see you talk about the funding sources. Where does this money come from? How does this money come about to the fintechs to become valued at $1 billion? Also, who determines this valuation? You talked a little bit about determination of valuation, but you didn't really go, quite deep enough for us to be very clear on who you were telling us that determine valuation. So that part was a little bit light. I thought that probably would have done a little bit more on that. So, but overall, it was quite a good presentation to give people a sense of what unicorn is. Now, having said that, I probably just take a few minutes to also just touch on the topic. Unicorn. If you are a fintech leader, you're someone that wants to play in that space, this is one term that you would not just know about, but you'll be hoping to be involved with in any capacity, whether you are involved with that word as the founder of the unicorn or as the legal person behind the representing a unicorn. When such funding comes and you're part of the legal team that is, handling legal for a company that is raising that amount, of course, you are going to smile to the bank very significantly too. So it is a concept that everybody wants to be involved with in whatever capacity, that you find yourself in space. So what is this unicorn? You already touched about it, where a fintech is giving a post-money valuation of $1 billion from whatever money that raised. Now, let's talk about, before I come to valuation, let's quickly talk about the fund itself. Where does this money come from? These monies that are put into the VC, into the fintech, where does it come from? I think in the previous conversations we've had before, I think I've mentioned about how when you're thinking of a fintech idea, you can't think about how sexy or how beautiful that idea is without thinking of how commercially viable that idea can be. How would you make money as a fintech? And the more commercial viability that your fintech shows, the more chances that you're going to raise the kind of money that will make you become a unicorn. So commercial viability of a fintech is a very key ingredient for you to get to the point where you are attracting funding from VC. So where does these monies come from? And talking about the funding sources now, we have what we call the venture capitalists, and these are guys that they kind of play the role the bank play, but in a different way. So they go find money from different investors, and then they put it together into what they call a fund, right? And then instead of lending you money like the bank gives to a company, the bank lends you money, and then you start repaying the money small with interest. The VC invests that money in you for a percentage of your company. So when they give you, say, $1 million, they can say, okay, instead of you taking this $1 million as a loan, and then you repay me back after 5 years, with 10% interest, take this $1 million and give me 5% of your company. Why I want 5% of your company is because I think your company is worth, if you do 5%, if 5% is a million, then you're talking about 200 million, right? So I think that your company is 20 million, right? So I think that your company is worth, say, 20 million, right? So if your company is worth 20 million, 5% of that 20 million is 1 million. So I think your company is worth 20 million and I want 5% of that company. So I'm going to give you 1 million. But because of what this my 1 million do for this company, we believe that by the time you put this 1 million into this company, this your company would not be worth 20 million again. It's going to be worth 100 million. So the effect of what my 1 million will do to your company will make it worth 100 million. So pre-money is before my 1 million comes. I'm valuing you for $20 million, right? And then I give you 1 million. So post money means after that 1 million I've given you, what would the company now worth? So you want to do marketing, you want to do different things, all those things you're going to put that money into. Those things will translate to make the company now worth 100 million. So if we say pre-money is 20 million, post-money is 100 million. That's how the concept of pre-money and post-money it's all about. So when you hear that somebody has raised and has become a unicorn, what that means is if I give you 100 million, right, and I say I want 20% of your business. So what I'm saying is that right now, before I give you this 100 million, your business is worth what? 500 million, right? And I want 20%. So 20% is let's say it's 500 million. But if you take this 100 million I'm giving you and put in that business, after you put this 100 million in that business is going to become 1 billion. So I'm giving you 100 million now for 20%, but immediately the day you just sign that check and sign on the line and collect my money, that your company is now worth 1 billion because of the effect my 100 million is going to put in that company. And that is how you become a unicorn. Because after taking that 100 million, you are now worth $1 billion, right? And that is how this money comes. So these venture capitalists are the guys that basically bring in this money. We also have guys like the private equity firm. They are similar to the venture capitalists, only that they do a whole much larger tickets, what they call ticket sizes. So what you call ticket size, basically the kind of amount that they put, the deal that they do is in tens of millions. They don't do small, they don't fund small at small stages, right? So you have the private equity guys. Another interesting funding source is what they call SPAC, SPAC. So SPAC is just a special purpose acquisition company, right? And what SPAC is I want to also go public. I think I've matured now, I'm making money, and I want to raise money, but I don't want to raise money from the venture capitalist. So I want to raise 100 million, but I don't want to. I want to go public, right? I want to go to stock exchange, right? Through what they call an IPO, an initial public offer. So the first time a company goes to a stock exchange, you have to do what they call an initial public offer, where people offer your shares for people to buy, right, your shares from you. But you might say, I don't want to offer my shares and then let 1 million people buy my shares, 10 kobo. I want big guys that can just bring in money and just buy up the entire shares once. So this PAC is the special purpose company that instead of you going public and say offer 1 million people to bring 100 naira or 100,000 to buy your shares, one company will buy the entire of that shares and then merge with you. When that company now buys you, right? Because they have bought all that shares, so they own you 100%. So it's another way that people fund, startup fintechs, and they also become unicorn. So if a SPAC buys you off or you merge with a SPAC, and it brings that kind of money that after it merges with you, the money is bringing into you, let's say 100 million. is going to value you at $1 billion, you also become a unicorn. So is that a VC is bringing that money? Is that a private equity person is bringing that money? Or what we call a spark is bringing that money? Or you're going to the stock exchange, you're going to the stock market to raise that money through an IPO, an initial public offering. So those are the ways that you can find those money that make you become a unicorn. Now, if you look at who determines that value that I'm a unicorn, I say yes, I'm doing good. I'm making sales. I sell $1 million, $1 million, $1 million naira worth of product every day. So I will now tell myself I'm a unicorn. No. So while the stage of your company plays an important role, while the sales of your company plays an important role, what basically determines whether you're going to be a unicorn or not is the supply market, right? The supply, the funder, the person bringing the money, right? Is a demand on supply thing, but it's always skewed towards supply. Because if I want to invest in you and you say, hey, I'm worth 100 million naira, and I say, no, I don't think your company is worth 100 million. I think your company is worth 40 million. And you say, no, my company is not worth 40 million. I think I'm worth 100 million. If you don't think I'm worth 100 million, keep your money. I don't want. So if I badly want to invest in you, if I really, really so much want to invest in you because I think your company is going to be great, I would accept your valuation of that company for up to 100 million, right? And that's where demand and supply comes. But if you need that money a whole lot, and I say, no, I don't think your company is worth 100 million. I think your company is just about 40 million. And if you want me to invest in you, I'm going to invest in you at a valuation of 40 million, right? And you want that investor's money badly. You accept the investment at that valuation, and that becomes the value of the company. So while before the investor comes about that money, that valuation of 40 million, there are several things they've checked, right? But ultimately, it is the guy bringing the money, the supply of that money, the market that is supplying of that money, that plays major part in what the valuation of that company will be, and whether you're going to be a unicorn or not. So if I want to raise money, I can give two companies the same amount of money, and one company will be valued at $1 billion, while the other company will be valued at $500 million. But both of them raised exactly the same amount of money. Both of them were given 100 million, right? But one was given 100 million with a valuation post money of 1 billion. The other one was given the same 100 million, but at a valuation post money of 500 million. It's all about what the investors see. Some of those things about your market share, your sales, all those different elements that will make them say, okay, this is where they are placing your business, and this is the value that they put on your business, right? So that's actually how, where the determination of this whole unicorn status or even valuation of the company lies. Is a significant role that the supplier of that money plays in the valuation of the company. And lastly, before I drop that, is also to talk about the markets generally, right? There's a time for boom, and then there's a time for when the market is down, right? And all these two also affect valuation of companies. So someone talked about how in 2021 there were quite a number of unicorns, right? The period of boom, what we call the period of boom in the market, right? So a lot of money is coming in. So there's too much money looking for fintechs to invest. So valuations will be skyrocketing. But when there's little money with a lot of fintechs chasing those money, like what we have now in 2023, what we call the time for correction, right? The market is down. So there's a lot of money out there wanting to invest. So people will accept lower valuation. But in 2021, the market had too much money, too much VCs, they're bringing money looking for fintech. In fact, sometimes you barely have an idea and they invest in you, right? That is a period of boom and valuations was high. There's also to understand how that affects valuation and exit. The end game for every startup, when you start a fintech today, there has to be an end game. You don't start a fintech today without an end game in mind. And there are only two ways you can end the game of a fintech. It's either you're acquired, right, acquisition, or you go to the stock market via an IPO or a SPAC. So either you're going public or you're acquired. That's the two end game, as how you exit, right? So just also to know the journey. I mean, the topic was about the journey. So when you start from the idea and you start making money, you start getting those funding, valuations start coming in, and you become a unicorn, there is an end game of a unicorn. And that is to either be acquired or you go to the market via an IPO, right? That is the end game. So that's just about that, to give you a little bit of insight around the unicorns generally. And I mean, for the guys on the agreement side, I know your mic wasn't, or network wasn't very clear talking about those agreements, but just to say, generally, there are different kinds of agreements that fintechs do, right? You have the co-founders agreement. Someone talked about that agreement between the guys starting the business to make sure that they accept whatever terms that they want to start up for themselves, how they share the company and all that kind of thing. You have the partnership kind of agreement that you set up with your partners that you're in the business with. You have licensing agreement, right? When you have to take licensing from either regulators or your fellow industry guys. You have funding agreements, right, that you do when you're collecting money from VCs or whatever source that you're getting money. You have sales agreements that you do when you're selling to your customers and all that kind of thing. So there are different kinds of agreement for different purposes. I'm sure probably you guys would have talked about it, but your network wasn't good. But great job so far by the guys, and I just hope that you guys keep at the same pace that you're going all the while, right? So thank you for that.
Thank you very much for that. Thank you very much. It was.
Thank you very much.
All right, sir. So would go ahead to, and I should really mention again, we're really sorry for the network itch we've been having. Looks like everyone in Nigeria is expressing the same thing. So really sorry. But we have to continue. So I don't think other mentors are available, or I just think the other mentors are here. So we'll just, okay.
Yeah, we have Chidima. Chidima is available.
Sorry. Please continue.
Hello, everyone. Can you hear me?
Hi. Good afternoon.
Good afternoon. Good afternoon, everyone.
Yes.
Yes. Sorry, were you saying something?
No, nothing.
Okay.
Please continue. Continue, please.
All right. So I just want to say thank you very much for giving me the opportunity to be a part of this great mentorship program. Sorry that my video is off. I'm still battling with network here, so I'm so sorry that my video is off. But I just want to say thank you very much for giving me the opportunity to be a part of this mentorship initiative. And even though I'm here to speak as a mentor, I'm also here to listen and to learn from every one of you. So thank you very much once again for the opportunity. Thank you also to Amanda, the speaker or the presenter for Group 1, and to Mr. George for also elaborating on funding and also how to determine valuation. I sure made notes on that. For Amanda, I mean, it was a great and well-detailed presentation. But it would have been nice if we also got like the source of the stats that you shared. I mean, there were a lot of stats in that presentation, which is great, but it would also be nice if we have like the source. And also speaking about the African companies that achieved that unicorn status, We spoke about Flutterwave, OPay, Paystack, and it's interesting because they are all digital payment service providers, and that digital space has massively grown over the past 5 years. And even according to, there's this website Statista, they say that the digital payment is the biggest or the largest segment in the fintech space. So yeah, that speaks to the innovation and the solutions that are provided in that digital payment. You also spoke about the challenges of the fintech space and challenges of these unicorn companies, and just not generally being able to, remain in a particular status, or having that relevance. But I don't know if I want to say I don't know if I want to call that a challenge, because I mean, it just gives everybody that level playing ground to come up with your own innovative solutions, which are obviously technology driven, and it's to just allow for more people to participate in that fintech space. So I don't know if I want to call that a challenge. Also, we spoke about you spoke about the regulatory compliance as a challenge. I like to also see the other way. So I know that the fintech space, in fact, just the financial space, is one of the heavily regulated spaces. And now coming to fintech, with the rapid transformation and growth of the space, it is imperative that we also have laws that govern the activities and transactions in that space. And we know that the regulators are almost playing catch up in this space. So we have companies that have come up and are carrying out activities, and then the regulators are coming up with laws, and the companies now have to go back to the regulators, say, okay, we will comply with this or we will not comply with this. So it's more like the regulators are playing a catch-up game. But if we see from the perspective of being able to engage our regulators before we even start a business. So if there's a law already, if there are requirements, if there are licenses that you need to acquire, you need to understand why you need those licenses. And which is why we even say that engagement with the regulators is important, because they need to understand what you're doing. They need to understand your type of business. And they need to also understand that, look, if you're putting in place this law, it's very stringent, it's not flexible, it's not something that is attainable. And, whatever you're trying to curb is causing a greater evil. So if you're able to engage with your regulators, you're able to also help to shaping the laws that will even flow from whatever the regulators are going to be preferring. And so I just think that it is not necessarily a challenge, because the fintech space really needs to be regulated, because we're talking about money. Money rules the world. Money is very important. I mean, it affects economies, and we just need to really understand. I think that there should be collaboration with the regulators, and they also need to understand the business and also look at it from the point of being an enabler of the business, even while thinking that, adopting the risk approach, but you need to also be an enabler of the business. And that's what coordination and collaboration with regulators will help solve. So I don't know if I want to call it a challenge, but yeah, I think that was like a summary of what you said and of your presentation. So yeah, thank you very much once again for the presentation. I did not follow the presentation of the other group, but I think I heard the shareholders agreement. So sorry, the network was very crappy. Yeah, so I heard about the shareholders agreement, and I heard about a lenders agreement. So I think I will just touch on the agreement side of the fintech transaction. So I would say that when you begin a business discussion with any company or any entity, the first thing that is necessary is always entering into an NDA. Now, the NDA allows parties to, freely share information, which the other receiving party is to treat as confidential. So we can say that an important clause in NDA is like a confidentiality clause, and confidentiality clause defines what the confidential information is. I mean, information that is not generally available to the public, because if it's already public information, that is no longer confidential. And then, the confidentiality clause also speaks about the scope of the confidential information, which may include, trade secrets, or the customers, or marketing strategies, or information on finance, or algorithms, computer programs, all of that. It could also state an exception to when you do not need to follow the confidentiality clause. For example, if there's a requirement of law, or like a law enforcement requirement. So for example, if there's a subpoena, you're obviously required to disclose, but even that confidentiality clause can tell you, okay, this is the extent that you can disclose. Another agreement that I think is very important in the fintech space, especially if you're dealing in the business of collecting personal data, and sharing data, just like most fintech companies do, is the data processing agreement. And so this agreement is between a data collector. So for example, we have something called KYC, which is a regulatory requirement for financial institutions. So you are required to identify and verify your users, and this verification should be done independently, meaning you're not the one that is verifying the user by yourself. So that means that you have to engage a verification service provider and share this information with them. So in such instances, you need to enter into a data processing agreement. So the agreement will now be between you as a data collector, and that person is called the data controller, and the verification company, and the verification company is called the data processor. Now, we can now say that the DPA, or the data processing agreement, is an agreement that defines the rights and obligations of the parties, as it relates to the data that is being collected or shared. And, it just states the purpose and the scope of the data that is to be processed. And it could also state, for example, the definition of, the parties. So in this, if you're drafting a DPA agreement, you should have a definition of the parties. So who is the controller? Who is the processor? It states the name of the companies. You state the purpose of processing the data. You state the obligations of the parties. For example, the data processor, what is he supposed to do? He's supposed to process the data that is given to him following an instruction. So there should be an instruction to process data, not just processing data on your own. And you just have to comply with the terms of the agreement. And there are also data protection laws that you're also required to comply with. For example, the GDPR. In Nigeria, we have the NDPR. You're also supposed to comply with the data processor's request, whether to amend or transfer or delete, or stop processing a particular data. And another important clause in the DPA is the confidentiality clause. So you're supposed to maintain confidentiality of the information being shared. And for the data processor, or the data controller rather, there's a requirement to obtain, requisite consent from the data subject. So you need to tell the users, the end users, the customers, that you're going to collect their data. And which is why we already have the privacy policy that people also have to consent to. So you tell them, you obtain their consent to even process that data. You have to state the purpose of collecting that data also. Another important clause is the security of data. We're still talking about the DPA. So another important clause in the DPA is security of data. And this clause requires parties to implement appropriate technical and organizational measures against, unauthorized or unlawful processing, or even access or disclosure of even, of personal data. And some of the measures that can be adopted to help in security of data is using multi-factor authentication, or data encryption, or building of firewalls, etc. And another clause that can also be stated in the data processing agreement is the data subject breach. Now, I don't know if I stated that this DPA, some people call it an addendum. So it's usually a part of a main contract. So for example, you have your SaaS agreement. SaaS is the software as a service agreement. So for example, you want to work with a company that provides certain services, or they will give you license to use their software. You know, the SaaS agreement already will state like the rights of the parties, what everybody is supposed to do. But then there is an addendum, and that is what this DPA is. So this DPA may not be a standalone agreement. It's usually subordinate to a main agreement. All right, so like I stated, there's a data subject breach clause. So what happens when there's a breach? You know, when there's a breach of data, what do you do? So the agreement can state something like requirement to notify the other party, or to investigate, or to analyze the extent of the breach. You know, you can determine, okay, whether you want to notify the data subject, you know, and provide damages, or to determine, you know, whether to even notify regulatory authorities or law enforcement agencies. So these are just some of the clauses that are very important in a DPA. We could also talk about lending agreements. Lending agreements obviously is tailored for lending companies. So, I mean, it's not going to just be an agreement that fits all fintech companies. So if you're in the lending space, or if you're a company that carries out, that leverages on technology to provide access to, you know, credit facilities, then you probably have a lending agreement on your platform. So that one too, you know, it could be, if you're carrying out peer-to-peer lending, then you have like terms of use that covers that peer-to-peer lending. If you're going to obtain finances from other companies, then we can say, oh, a general lending agreement will work for you. So and so on and so forth. There are different agreements that are tailored to different types of companies that operate in the different spaces. So yeah, that's my own contribution. So thank you very much.
Thank you very much, ma. I don't know if Omotose is there. Okay. Thank you very much, ma, for your contribution. I don't know if we can still take Group 2's presentation before we move to the picture time and the question and answer session. Group 2 member, are you ready? You have like 3 minutes to just round up. Okay, we'll be taking the picture time now. We encourage everybody to put on their videos, smile for the camera. We'll be taking some screenshots of the meeting, and we'll be posting on our LinkedIn page and our other social media platforms, tagging our mentors, tagging JIIPCC, and saying one or two things we've taken down from this session today. Thank you very much as you do so. Can you all hear me, please?
We can hear you.
I don't know what at this time. My network can just go up and thank you. I can see some people are posting on their videos. Ledum, Gladys, Dara, Ita, Blessing, Owu, Ali, Nima, Rita, Pat, Oboba, Sonia, Ekiti. Thank you very much. Nemi, Tiro Michael, Anu Olapo, Anu Oluwapo, Babatunde, Ibukuola, Oludipo. Please put on your cameras. We want to see our mentees' face and also our mentors.
Right.
Can you hear me?
Yes, we can. We can hear you.
So, I don't know. Okay, I have some pictures. Let's just move to the question and answer.
All right. Thank you very much.
I'll be taking the first question for Mr. George Onyewuchi. By what other metrics or KPI would you say is used in determining the unicorn status of a fintech company? This is aside the $1 billion valuation. I don't know if Mr. George is close. Mr. George. Okay, Mrs. Chidema can take the question.
Hello, can you hear me?
Yes, we can hear you clearly.
Yes, I can hear you.
Okay. Please can you repeat
did
the
you
question?
get the question, or can I should I? Okay, yeah. By what other metrics or KPI would you say it's used in determining the unicorn status of a fintech company? That's aside the $1 billion valuation.
Okay, thank you very much. Okay, in my opinion, I would say that there are a number of factors that need to be considered before you can attain that unicorn status. One thing first is it has to be your product. So you have to think about the product itself, you know, the product or service. So it's not so much about the technology, it's not so much about how beautiful your product or service is, but you need to think about the real value of the product. You know, is it an indispensable product? Is it, you know, like a groundbreaking solution? You need to think about the value, the actual value of the product. And just like Mr. George said, you should also think about the commercial viability of the product itself. You know, so when you're able to position yourself at a point where your product is very valuable, is like a go-to product or service. My emphasis has been on product. You know, if it's a go-to product or service, then you can now say, okay, it is possible that you can achieve this status. It is possible that you can attract, you know, investors. It is possible that you can serve like a huge market base. It's possible that you can have a good number of, you know, users or consumers or customers that are utilizing this product. Another thing that I would say is you need to position yourself or position your business in line with the regulations or compliance requirements. So for example, if there are licenses that need to be acquired, or if there are licenses that need to be obtained in certain areas or in certain fintech spaces, you need to also think about going through whatever regulatory requirements, whatever requirements it will take to get that license. Because, you know, when you're able to meet up with regulatory requirements, it puts you on a higher pedestal, because your users, your customers will trust your brand more. It would attract even more investors. And, you know, there's the likelihood that your business will not collapse as a result of regulatory clampdown. You know, we see a lot of companies that, oh, great companies today, and next thing we hear that, oh, the company was shut down because they did not do so and so, they did not get this license or did not acquire, you know, they didn't meet up certain regulatory requirements. So you need to position your business always in line with the regulatory requirements. Another thing you also need to think about is how vast is your market base. So are you serving a large group of people? Is your business scalable? Is it a business that just focuses on one market and cannot scale to another market, or cannot even scale to another country? You know, how can you, is your business one that you can improve and can even serve a larger market base? Because if it is, then it can lead to increased revenue. And of course, you put your business in a position to enter into more strategic partnerships that can increase your company's valuation. And, you know, it can also help to, you know, attain that unicorn status, so-called. You know, it can attract more funding opportunities when you're able to show that your business is scalable. So I think, in my opinion, these are just some of the items that you need to consider. You know, your product or service itself, you know, considering regulatory requirements, your market base, and how well you can attract investors, how well Mr. George already spoke about the venture capitalists. They are not going to come to your business if you only have one customer or two customers. So you need to prove your worth. You need to prove your business, or you need to prove that your business is scalable and it provides real solutions. So that's my 2 cents. Thank you.
Thank you very much, Lima. Thank you for that insight. Thank you so much. I'll go to the next question. It says that can a unicorn fintech company lose its status as a unicorn company in the event that it fails to meet up with the set metric or KPI? Or an addendum to that is, or is it that once a company becomes a unicorn, it holds that position regardless of decline in its value? So should I go over that again?
I think the question is okay. Mr. George is on the call now, so we can have responses from both our mentors.
Mr. Judge, please.
Oh, okay. Sorry. Can you hear me?
Yes, sir. We can hear you.
Yes,
clearly.
Oh, okay. Sorry, I had to step off for a minute. I think if I get the question right, we're talking about if the fintech will lose the unicorn status, if the value
Yes,
goes below $1 billion. Is that correct?
yes, sir. That is the question.
Oh,
If
okay.
it fails to KPI.
Oh, okay. So the what do I call it now? The KPI of fintech, the status of a unicorn of a fintech is not necessarily driven by KPIs that are known outwardly, right? So whatever KPI the fintech has is between the fintech and its investors, right? And the board of that fintech, right? What gives you that unicorn status is that as at your last valuation, so as at the last time you raised money, what were you valued for? So if you don't raise money again, right, you still remain a unicorn until an activity that would make you have interactions with money. Whether you're raising money again, whether it is that you are being acquired, whether it is that you are being bought, even for a unicorn that fails and somebody buys you up, right? There must be an interaction with a funding activity, because that is when valuation is done. So you remain a unicorn from your last valuation until an activity comes about that would require a valuation to be done on you. And it has to be a funding related activity. So that's only when, if you have now lost, maybe you're no more the leader of the market, something has happened, and then your sales have dropped, and the new people that want to give you money don't think that you're still worth $1 billion. Maybe they think you are now worth about 500 million, and you agree and accept that money at that valuation. Then you've lost that status as a unicorn. So it's all about funding activity. It's all about anytime you're valued. So you remain a unicorn to your next valuation.
All right, thank you very much for that, sir. I wonder if Chidma has anything to say about that. Okay, I don't know. Okay, I can't hear anything. So we'll just move to the next question. The next question is quite short, and I think Chidima touched most of it earlier. So I will just, it says agreements for fintech companies. What agreements should fintech companies have and why? So like, what are those agreements that fintech companies must have, and why should they have those agreements? Mr. Judge, please.
Am I audible now? Can you hear me?
Yes. Yeah.
Okay, if I get the question, it was is you say what agreements that fintech companies must have? Is that the question?
Yes, sir.
Oh, okay. I mean, so there's no hard rule to it. Yeah, there's no particular hard rule to it. It's just a function of what is your company or what are you as a fintech, right? What you are as a fintech will determine the agreements that you have. The ones that are general, which is the funding agreement, the founders agreement, right? What binds you founders together? That one is expected. You still see a lot of fintechs that don't have founders agreement, and that's why you see when founders have fights between themselves because some things were not clearly stated out, right? So, but it's expected that you have a founders agreement, or co-founders agreement, right? What will bind all of you as co-founders. Of course, if you have partners, you must have an agreement. What it is that is binding, you and whatever partnerships that you're getting into. So that is basic. No matter what you're doing as a fintech, once you want to get a partner, there must be agreements that are signed. If you have sales agreements, right, with your what we call with your customers or your users, right? A lot of times you see when you want to use a product, you see terms and conditions, accept. Some of us will just quickly tap accept without even doing that thing. You are indirectly entering an agreement with the fintech, unconsciously, right? So those are sales or user agreements that you have with your users, right? You have funding agreements with your funders, people that are giving you money. How much are you giving me? At what value? How many percent of my business are you going to take? What is going to be the post-money valuation of this money? So those terms and conditions around the money you are giving me will be contained in an agreement. So there will be funding agreement, right? So different kinds of agreement depending on the area of the business. So there's no checklist here. This is a must. It depends on what you're doing as a fintech that determines the kinds of agreements that you have to do. If you're raising money, definitely you need a funding agreement. If you're not raising money, then that doesn't come into play, right? So it all depends on the kind of what you're doing. But it's just to make sure that whatever it is that you're doing, make sure as long as you're doing something with another party, whether it's customers, whether it's partners, whether it's co-founders, whether it's regulators, whether it's financiers, immediately you're engaging into an activity with another party, you have to ensure that there's an agreement that is binding, that relationship.
All right, sir. Thank you very much. Thank you very much for that, sir. We're very grateful for your presence today. And we are rounding off quickly, but I would open the floor for anyone with questions. Anyone with questions, please kindly ask. And while we're waiting for the questions, I have to ask, sir, most VCs, most companies in Nigeria, most fintech companies rely on funding from outside the country. They rely on the interaction, like JIIPCC Cash had to partner with Paystack. Most Nigerian fintech companies have to interact with foreign companies. Is there hope for Nigerian fintech companies to go through their whole process without foreign funding, without foreign participation in any way?
So, yes, there's hope it could happen. How likely is it? Incredibly slim. And the reason it's incredibly slim is that there's what we call patient capital, right? There's what we call cost of funds, how much it costs you to raise money. So the reason a bank will give you money and say, I'm giving you 100,000, but our interest rate is 25%, right? Is that for them to raise that 100,000 they are borrowing you, it is costing them something, right? That money that they are paying you on your savings accounts, somebody is paying for that money. That money is not coming from the bank's nose. So when you have a savings account and you see they tell you they pay you interest of this amount, that money is not disappearing and coming into your account. Somebody is paying for it somewhere. It is because when they take that your money in your savings account and give it to somebody else as a loan, they charge the person interest for that loan. And part of that thing that they charge the person for that loan is part of the money that they give you back as interest on your savings account. So that's how banking works. So there's a cost to raising money. But because it's cheaper to raise money outside the country, that's why most of these VCs have more money than investors in Nigeria. Then, of course, the power of the dollar currency versus Naira. So, right, if the person doing the same job that you do here in Nigeria, in US, for example, is earning, let's say in Nigeria, for the job you're doing right now, let's say you're being paid 200,000 Naira in a month. Now, the person in US doing exactly the same job with you probably is paid about $3,000 in a month. Now, because of the power of the currency, by the time he brings that his 3,000 Naira to Nigeria, that $3,000 to Nigeria, that $3,000 become over $1 million already, right, in Nigeria. So what that means is that if he comes to Nigeria, he's doing the same job as you, but he can, while you have 200,000, he can afford to keep 500,000 from his money to invest in a company and still have much more than enough money to still enjoy himself or take care of his family and live the same way you are living on 200K. So because of that, because of the power of the currency, people that have saved money, people that have been able to raise money together over there can come here and that money will be worth much more. So it's very unlikely in any time soon that you would be able to really grow as a fintech because of the kind of money you need to scale. You need, quite millions of dollars to scale. And you can't easily raise those millions of dollars within Nigeria, right? Without it costing you far more than you raise it outside Nigeria, right? And that is why, people would always go to raise money because those are the guys that have most of the money. Even the Nigerian investors will give those guys their money because those guys will be able to invest it at much more return rates, right? So it's just sort of fun, that's all. Hopefully, at some point, as our economy is getting better, as more wealthy people like Dangote and Co. decide to not just invest in cement, we decide to now start investing in fintechs and start putting money together, then we'll now start to have those kinds of available monies, the kinds of levels that fintech needs. But those guys that are captains of industry that have those kind of money, they are not yet investing in Nigerian fintechs yet. So they have to go out and look for the money.
All right, sir. Thank you very much for that, sir. Thank you. Okay, that's it from me. We'll quickly take a remark from Mr. Joseph.
Thank you very much, Mr. Motoye. Thank you, Mr. Hussein. Thank you to our mentors, Mr. George. Thank you so much, Chidima. Thanks a lot as well. I know that this is costing us so much in terms of having to spare time on a weekend to join the program. But I very much believe that the mentees we have here would place value on the information that they're actually receiving and try to work it out to see how this information can translate to positive variables for their own life plan, life goals, and career paths, basically. The only other addition that I would have loved to make basically has to do with the fact that we have to see companies from the angle of, agreements. I just wanted to touch on the agreement part in another 5 to 10 seconds. A contract is like in the middle of everything that happens in a company. If you are talking to a funding partner, you have a contract. If you are talking to, maybe there is some innovation about your product, you have another contract. If you are talking to your supplier, you have another contract. Even in terms of your management team, you have another contract. You want to source anything at all, like everything that you should do from that legal standpoint, you should have one contract or the other that would oversee your interactions with various parts of what your business or your fintech company is really about. And at the end of the day, what some companies are actually doing, artificial intelligence is already influencing. Like I did some research of some fintech companies. They actually handle the contractual aspects, agreement aspects of their operations differently. Some of these companies are already engaging with artificial intelligence. They are looking at CLM, that's SaaS products that help them to manage contracts. They are looking at products that can identify who is responsible for contract outcomes, because it's not just enough to have a contract. A contract would be talking about the responsibilities of different people. So somebody has to stay at the center of all that back and forth to be able to say, okay, the CEO needs to do this, the co-founder needs to do this, the CFO needs to do this, the CIO needs to do this, all that interaction, because that's what a contract basically does. It has to look at all the interactions by virtue of what the company intends to engage in. So I would encourage us, those of us who are lawyers, research in this area. It's an interesting one, and you'll be shocked what you find out if you really dig your heels into the ground to find out much more information. So by and large, I want to say a very big thank you to the mentees for researching together. Group 2, I know that today was a bit hectic because of the network, and I'm sure that by next week Saturday, I don't think we are meeting next week Saturday because of the elections. So I just want to encourage us, see the mentorship program as something that, in fact, even if you don't listen to everything, just look out for just one thing that could put you or push you in the right direction or in a different direction for you to start thinking about, to see how you can at least grow something out of the information that you're actually getting from here. So once more, thank you to everyone. Mr. Hussein, thank you very much. Network was really terrible today, but we were still able to come out strong at the end of the day. Thank you so much. And I also want to send regards from Juliana to everyone. She didn't ask me to do that, but I feel it's important once in a while to just say thank you on her behalf. Yeah. Omoto, yeah, I'm done.
All right, thank you for that, sir. Okay, to the mentees, thank you for your presence. Thank you for staying through. I know the network was terrible, but thank you still. And for our mentors, Judge and Ms. Chidima, thank you so much for taking out this time. Everyone,
sorry,
I wish you a wonderful weekend.
Can you hear me?
Yes, sir.
Yeah, just the last word before I run. One of the things that I always like to do is to always remind people, especially your mentees here, on how much this is not just, shouldn't be just a listening exercise, right? There should be a personal gain, a personal part to this. I'm always a very big preacher of you and you limited.com, right? Or you and you enterprises, right? Always ask yourself, how do you want to play in this space? And I think maybe JIIPCC should consider making it maybe like a module, probably the last module or something, where everybody shows their plan on how they want to progress, whether it's their career or their footprints in this space. And let me just quickly share a story with myself and how you can really just change everything around you by just trying, right? When I was a heavy person in this tech space, right? But when I got into the blockchain space, I came in like a novice, just like everybody. For a while, I wasn't interested in speculative investment that people were doing with Bitcoin and all that kind of thing. I was really interested in how can this technology really become useful, beyond this whole buy and sell of Bitcoins, right? And I started making a lot of researches, And then from researchers, I started talking about it, right? And that is what happens when you take an aspect and start, trying to become or build yourself in that aspect and become an authority, right? And just by doing that, and then I started bringing in, I started looking for, very key guys in the industry that I can drag and have conversations with. And then I just started a session, right? I started a live stream session around it. And I don't think I did that session when I started it then. I don't think I had done the 4th month, right? When I got an offer from a company to come to, that was Dubai as a then, all expense paid, to be part of the conversation, right? And after that one, I think the next one that came around to me was Portugal, right? And this is just by having interaction and asking people that know more than me questions and just having interactions, right? And we just rub off on each other like that. And then it becomes, because I'm the one facilitating that conversation, it becomes like all this knowledge resides in me. But basically, this is me drawing out knowledge from all the people I'm speaking with, right? But where I'm going to is, when you don't look at where you are now, just start, right? Just decide that, okay, this is the area I just want to do something around, and have a plan on how you could develop yourself and share that knowledge outwardly. And you never just can tell how these things can change the course of your career or change the course of your your trajectory, right? So let's not look at this as just a listening exercise. JIIPCC is doing a great work by opening this awareness, awakening it in you. But you have to do something yourself and have a very deliberate plan on how you want to take this learning and run with it. What small part of it do you want to run with? Do that, and I think by the end of your program, every one of you should have a plan of what you decided, to do with the knowledge that you have here. And then probably JIIPCC can now even set up a program to help, you guys, follow up with you guys after the program to see how you're progressing and what other support they can give to you. And this becomes, very experiential, right? And have a particular outcome for mentees beyond just the learning. Yeah, I just thought to share that.
Yeah, thank you so much. In fact, that's worth more than $1 million for anybody who on it. Thank you so very much, Mr. George. I really appreciate.
Right, take care.
Yeah, we can hear you, sir.
I think I should round up.
Yes,
I think we can round up.
Yes, sir. All right, thank you, everybody. Have a lovely weekend.
Yeah, thank you. Enjoy your weekend.
Thank you.
Vote wisely. Vote wisely. Vote wisely.
Of course.
Vote for your right candidate. Let's be involved in the elections as well. Anyways, yeah. Do have a wonderful weekend, guys.
Yes, sir. Thank you very much.
Yeah, bye.
Thank you very much. Bye.
All right.